Exporting Essentials, Alternative Sources of Finance on what is a very dreary, drizzly Wednesday, May 29th. As many of you will probably know, Open to Export is a relatively new site, and it combines UK, TI, and Hebrew resources and sources and knowledge, and support small businesses with exporting, and pulls all of the resources together in one site. Have a look at that. So before we actually get into the presentations, which are really very full and informative this afternoon, there's a little bit of housekeeping for attendees. We really want you to be participating in this. Obviously, you make the webinar even better and stronger and more topical for yourselves. So you'll see on your panel that there is a question section. You can, during the webinars, you can be typing in questions, and you can submit your questions via that panel. This presentation is being recorded, and it will be available at the end of 48 hours. However, what we'll try and do either during the presentations or at the very end is answer as many of the questions as possible. The other thing that will be happening throughout the presentations is a poll. So again, we need you to be interactive, peers helping peers and helping us to make it more informative. So the quick poll questions for you are up on the screen now, and we're going to ask you to take part in that. And I'll be watching as you do, and then we'll come back with the results. So the question, have you looked at different sources of finance to support your export activities? And select one. Never considered it, some research conducted, extensive research conducted, using alternative sources already. Wow, I can see that over 70% of you, nearly 80% of you have already done your voting. It's fantastic. Okay, and the poll is closed. All right. So what can we see from the results? That some of you have done research, nearly half of you, some research conducted. 22% of you, nearly a quarter of you have never considered it. A few of you have done some extensive research, and some of you are using alternative sources already. Fantastic. Right. As alternative sources of finance is what we're going to be speaking about. I'll tell you a little bit about myself before I move on to the Growth Accelerator. I have had two businesses that functioned in an international environment in the past, and I've spent the last 15 years raising funds for SMEs to help them grow and develop. And since October, I've been here as a growth manager at the Growth Accelerator, and I'm based at Grand Thornton for this. I'm helping people to access alternative sources of finance, but the Growth Accelerator actually, my slides are sticking. Thank you very much. The Growth Accelerator can help businesses in a number of ways to grow and develop, and that might be in a marketing, a sales environment, people environment, and we can also help you access finance. There are details at the end of this on the slides. So while I was doing my research into SMEs and exporting and looking at my own client base, I came across this quote. The UK needs to develop and diversify our products in international markets, place special emphasis on the needs of small and medium-sized enterprises, enhance the image and competitiveness of our products and services in world markets, and reinforce our image as an open and good business partner. Now, I think all of us, participants, presenters, would agree that this actually makes good sense. However, we're seeing this against the backdrop of a House of Lords Select Committee report citing that SME exporting fell by 13% in their most recent available data was 2010. So we really want to find out why this is happening, and is this because finance is mysterious? Is it because we're lacking the right support? Is it because we don't understand finance and alternative sources of finance? And so hopefully today we're going to try and demystify some of this for you and give you some useful information. Okay, that's how you would fit into a growth mapper, growth accelerator scenario. Okay, right. Before we get into the more specific alternative forms of finance that you'll be hearing from our presenters, I think it's just good to go over some of the things you might already be familiar with and why we look at alternative forms of finance for exporting and being successful at exporting. It may be that it improves your cash flow, increases your speed of payments. It might be cultural and language barriers that you want to deal with and maximize your opportunities. Many of us have heard of investment or loans, invoice factoring and discounting, letters of credit, or export bills. Bonds and guarantees might be a bit more mysterious, or international currency accounts. What's important is that you choose the right product at the right price at the right time for your business. There are other things to remember, sort of hints and tips. You should always do your country research. Many people export without actually visiting the country. Develop networks. And also think laterally about how you get involved. It may be that you go direct, or it might be that you work with a supplier. You've got a strong relationship with a supplier or a distributor, and you might go into some sort of joint arrangement with them. Also, it's important to review your existing product lines and look at innovating or tailoring to maximize your margins, as well as introducing new product development. And consider the less obvious but nevertheless rapidly growing economies of the future. So keep an eye out on things like the site Open to Export and look for any kind of research that's being developed. As we would in the UK, you need to carry out your due diligence on your customers, right? Don't forget the basics. And become familiar with the laws and legislation around exporting and also the documentation. And I know there have been some webinars on documentation before on this site as well. Okay. I think we know about me already. And this is the Growth Accelerator contact information. Okay. So the second part of our poll, you have to get active again. We need your help. How experienced are you with exporting? Very good. Everyone's being really quick on this. Again, over 70% of you, nearly 80% of you already voted, which is fantastic. And fantastic. That's great. Okay. So, well, it's almost an even split, isn't there? Some of you are experienced at exporting, about just under 40%. Some of you have just started, and some of you are brand new. So hopefully today everyone will take something from this, whether you're new to it or you've used some of the tools and instruments available and you're just going to find out about more. All right. Okay, so now we move on to our first presenter, and this is Laura McMullen from Funding Circle. Laura is the Director of Business Development at Funding Circle and heads up the sales and marketing activities for intermediaries. Since joining, Laura has been instrumental in growing this channel for Funding Circle across the UK. Laura has a broad spectrum of experience across financial services and marketing. This includes working with SMEs in business development at a global marketing company, to strategy optimization for large consumer businesses, and investor relations within asset management at Macquarie Infrastructure and private equity. Laura, I'll hand it over to you now.
Thanks very much, Helen. Hello, everybody. Good afternoon. I'm going to tell you a little bit about Funding Circle. So I'm hoping some of you have heard of Funding Circle, but if you haven't, not to worry. It's a very simple model. You may have heard of crowdfunding or peer-to-peer lending, and that's simply what it is. We are taking funds from a number of investors, or rather investor funds, and lending them out to businesses. So Funding Circle act as one of these peer-to-peer lenders, if you like. We've lent over £100 million so far, and we manage the payments, we manage the credit assessment, and we bring to a platform the opportunity for investors to lend to many different businesses. So this chart here just shows you a little bit about how far we've come in the 3 years, or just under 3 years that we've been operating. We've lent, as I mentioned, over £100 million, and we're currently lending at about £10 million per month. Now the general sort of finance market out there and the bank lending has certainly been in decline for the last few years. And what we're seeing is that there is still a demand for business finance out there, and therefore the ability for SMEs to access this finance is really key for their growth. And we're seeing an increased demand since we've been operating, as you can see, and we have been increasing the number of products that we've got available and the number of businesses that we can lend to. So we were started in 2010, and we started off quite small, but now we are lending up to £1 million to businesses over a number of different products, number of different terms, and it's very much quite a flexible product that many business owners have found it useful to use. In terms of sort of crowdfunding or peer-to-peer lending in general, it's certainly growing in prominence. Sort of what started off in 2010, lending about £60 million. Last year, 2012, it was sort of 200, 250 million, and we're looking at 2013 at being, upwards of 400, 500 million. And that's only across the sort of 3 or 4 largest players in the UK. There was recently a crowdfunding, crowdsourcing report released that showed sort of over $2.5 billion US dollars was raised via this method in 2012, and that's across a number of different platforms. What is interesting is that you'll see there on that last bullet, the government is now funding 20% of every loan on funding.
Sorry, Laura, sorry.
Yeah.
Sorry to interrupt you, Laura, but we had a question sent in, and it's also, I'm feeling it myself, you're going in and out, and it gets a little bit quiet, so maybe if you can speak up as well or adjust the headset. Thank you so much.
Yeah, absolutely. I'll hold the microphone there closer. Hopefully that is a bit better. So I was mentioning that the government are lending on the platform, and this means that the Business Finance Partnership is part of the general initiative from the government to allow businesses to access finance through non-traditional routes. And £20 million has been given to the Funding Circle platform to assist these businesses. So you'll see that 20% of every loan that's listed on our platform is actually being funded by the government, so it's sort of match funding, if you like. And we have a community of over 40,000 individual investors, and they might be institutions and companies or everyday people like you and me. I'll come on to the actual platform and the marketplace in a little bit of detail shortly. So what kind of loans do we offer? We offer business loans up to £1 million, and they really can be for pretty much any purpose. So if you're looking at expanding your operations, or maybe you want to buy more stock to export, or it might be enhancing your staff numbers, then we can look at all of that. So I've listed a few typical reasons that we might see in our applications from businesses. So just going on to the next slide, I just thought I'd paint a picture of what kind of businesses come to us. Now, we do a lot in the manufacturing, engineering, wholesale and retail sectors. And I'm thinking that maybe there might be a good few of you on the call that sort of are in those sort of sectors. Now, we will consider businesses from pretty much most sectors. And what we look at is the business itself and how strong it is and its creditworthiness. So they must be established businesses, limited companies or limited liability partnerships with good credit history, good financials, and an ability to sort of meet the loan repayments, and that's how we make our assessment. Businesses typically will be turning over at least £100,000, and they will need to have 2 years of filed accounts at Companies House. But we will look across lots of different businesses.
Laura, I hate to interrupt you again, but the audio is still quite in and out, so I'm not quite...
Let me try there. I'm going to see if that's a bit better. Hopefully it is. So the next
sounds better already.
Good to hear. The next slide that I've got on here just shows you a very simple, quick snapshot of our platform, our marketplace online. Now, some of you may have gone onto Funding Circle and had a look around, some of you may not, but the way I sort of describe it is it's almost like a mixture between Dragon's Den and a reverse eBay. So you've got many thousands of different investors online at any one time bidding to be part of a loan. So any one loan may be made up of hundreds, if not sort of a couple of thousand, individual different investors. Now you'll see in the bottom left of this slide there are about nine individual bids that are going that have been offered at a certain rate. So what happens is the most competitive bids become part of that particular auction. So you'll see here that the 180,000 that this business wants, they want it to fund UK and international growth. We have details about the business listed there, and individual investors can click on those different tabs and find out a bit more about the business. And how it works is individual investors put their bid amounts in, and it's only those investors that form the sort of the lowest rates, the most competitive rates, that become part of the loan, and that's the sort of eBay style of it. And every investor can choose whether or not to lend to a business. What we have at the end of it is that full amount at an average rate across the hundreds or thousands of different investors. What the business can do is they can take those funds right there and then as soon as it's fully funded, or they can wait for up to 7 or 14 days, and the rate will typically drop as you see more investors come in. It's at that point that the borrower, the business, can receive the funds. And it's really as simple as that. I'd certainly urge you to have a look at the platform, at the website, and if you need funding costs for exporting or for general expansion, maybe it's working capital, then if you're a good business that's been trading for a few years, there's a good chance we can help you. And I think I will
Terrific.
hand
Thank
over.
you very much, Laura.
Okay, I'll hand back to Helen. Okay.
Okay,
Feel free to ask any questions too.
Thank you very much to Laura for that explanation.
Okay.
I have experienced a couple of Funding Circle clients myself. I would say also, please, everyone be encouraged to send your questions in as we're going through. And we're up to your participation again. It's time for another poll. So, where do you usually direct your export finance queries? And the poll is open. We're just waiting for the last few. No, we're not going to get everyone. Okay, the results, the poll is closed. Well, not surprisingly, the majority of you would direct it to your bank, because I think that's the thing that we first think about. And today we'll give you some more variety there. Some people look on the internet, and you might come across sites like the Funding Circle site, government agency. Again, there's good resources. Few to your accountant, and then others. So I think we all agree with that. Okay. Okay, and moving on now, we have our next speaker, who is Anil Stocker from Market Invoice. Anil, in 2011, co-founded and successfully launched a next-generation financial startup called Market Invoice. It's now channeled £50 million into funding SMEs across the UK, offering an innovative new way for companies to finance their working capital. He has a background in private equity, working first with Lehman Brothers Private Equity Group and subsequently the investment bank Cogent Partners. Raised in Zurich and London, he speaks fluent French and German, and he achieved a double first in economics from Trinity College, Cambridge. And I'll hand over now.
Thank you very much. It's great to be here taking part in this webinar. Basically, we launched about 2 years ago, and what I want to do is quickly go over what we do here at Market Invoice, the companies that we help, and perhaps direct you to some of our resources online, as well as give you some brief case studies of companies that are using us successfully. So if we just move to the first slide here. Yeah, so Market Invoice. We are an online finance portal, and we're bringing together companies that need working capital These companies are in a lot of different sectors. So if you look on the left-hand side of the page, we're helping companies in recruitment, software, marketing, manufacturers, management consultancies, engineering companies. And all these companies, they turn over anywhere between £500,000 a year right up to £30 million a year. And what they all do is they supply very large blue chip customers. So, think of all the suppliers into the big multinational companies. So suppliers into Tesco, Marks and Spencer's, AstraZeneca, BAE. We also have companies that are supplying into government debtors, so NHS, local authorities, schools. So what do these companies have in common? They're all doing large projects. They're dealing with the big boys, and they have to wait a long time to get paid. And this, waiting on your invoice 30, 60, 90, 120 days can cause real bottlenecks in terms of working capital. These businesses need to fund their overheads. They need to pitch for new work. They need to keep their businesses growing. And as you all know, not having the cash in place when you need it can be quite detrimental to businesses, or at least limit their revenue growth. So what can they do? They can come to Market Invoice and they can draw down funding against invoices for large projects to large end customers. And these funds are being channeled by Market Invoice from sophisticated investors. So these are coming from high net worth individuals, asset managers, family offices, investment funds. And in a sort of similar way that Funding Circle just outlined, we were also part of the Business Finance Partnership work and partnership that was forged with the government. We recently secured £5 million under the program, and because that money kind of churns every 45, 50 days, it's actually the equivalent to close to £40 million a year in working capital that sits alongside all the private sector investors. So that's really given us a whole new line of funding to channel to small businesses. If I move to the next slide, I set up Market Invoice with my business partners and the whole team here really to shake up the world and disrupt the world of factoring and invoice discounting. Lots of business owners have heard about factoring. They understand what invoice discounting is. But what we wanted to do is completely change the way that's perceived, because factoring has been equated in the past with high fees and bureaucracy and a long time to get set up. So, how are we different? How have we changed this model? Firstly, it's very quick to get set up and use us. Companies can apply on a Monday and they're all set up by Friday. Once they're set up and go through that onboarding process, it starts with an application form on the website, which takes about 10-15 minutes to complete. Once they've done that, you can then launch requests for funding and get drawdown funds within 24 hours each time you want to use it. You're in control. Why? Businesses can use us whenever they want to. They don't need to use us for every invoice, for every debtor. They can dip in and out, use us on selected invoices. At certain times during the year, they can isolate or target a few large customers or large projects which they know they take a long time to get paid for but need cash earlier. All our fees are transparent. It's very clear from when you join and when you ask when you request a drawdown, how much you're going to pay, how much you're going to get. There's no nasty surprises. It's extremely flexible. There's no contractual lock-in, no minimum fees. We don't take debentures or personal guarantees. Where possible, we make it a confidential service, so you don't need to notify your end customer. And interestingly, we have been helping a lot of exporters who export to large multinationals around the world. Why? Because the banks are unwilling to put up risk capital or to put up loans for export invoices. It's actually one of the black holes that exist in working capital finance in the UK, which is somewhat ironic given that the UK, lots of politicians talk about UK exporting our way out of growth. So what kind of companies do we work with? We are typically working with companies with at least 6 months trading history. Having said that, we've helped start up businesses only in specific sectors. Typically the turnover of companies using us is anywhere between £250,000 on the small end right up to £50 million. Companies that use us all supply blue chip debtors, as I was saying, listed companies, large private firms or governments. Exporters who use us right now, we typically can help exporters exporting to OECD jurisdictions. I'll come back to that point in a second. Why do companies using us? They have foreign debtors who take a long time to pay. They're overtrading or experiencing high growth, or they've just landed a big project and a big contract which requires more cash for them to deliver. Or businesses that have volatile cash flows or seasonal demand. So we see a lot of interest from businesses that don't need financing the whole year round, only in specific months, seasons, or for specific cycles. Out of the 50 million that we've channeled to SMEs since we launched about 2 years ago, just over 15 million has gone to finance export invoices, which is really, which is a really good result. We're very, very happy for that. About that, we've helped businesses who supply into the EU, all over the EU, Switzerland, Scandinavia, the US, the Far East, including Japan. We've also had a lot of applications for companies and help companies supply in the Middle East, places like Azerbaijan, and as we kind of get more experience and more expertise in this export arena, we're also opening up the geographies to places like South Africa and Ghana, because we know that there's there's an increasing amount of trade between British SMEs and growing emerging market economies. I'm just going to take you through a few case studies. This case study actually was in the press this weekend. It was covered in the Mail on Sunday, if any of you read that. This is a company called Predator. It's a niche manufacturer of specialist trailers for agriculture and industrial use based in Northern Ireland. Interesting story behind the company was that it used to be that the main customers for this business were in the Republic of Ireland, but as the Republic of Ireland went through a huge crisis in the economic downturn, the company had to rebalance and start supplying foreign companies in foreign jurisdictions, and they landed a big contract with a Finnish company, listed Finnish company. They struggled to get invoice finance against these export invoices from their banking route, so they signed up with Market Invoice. They've used us 18 times. They've drawn down to close to £600,000, typically paying 1% of their invoice value per 30 days and getting about 90% of the invoice funded up front by Market Invoice. This finance has allowed the company to extend their factory and move into new product lines. It's a very happy customer. Another company that has used us extensively has been a explosives education training company. What they do is they train governments and military personnel within governments to combat terrorism. They work with many clients in the Middle East, as you know, that a lot of these businesses, a lot of these companies, a lot of these governments are very concerned about improving security. Typically, working with Middle Eastern debtors takes up to 5 months to get paid on the invoice, and so ISSEE has been using Market Invoice to draw down financing against these invoices to help cover overheads, expand, and take on larger contracts. So that gives a brief kind of overview of Market Invoice. There's a lot more information on our website, including more case studies and a cost calculator and lots of other resources. There's also some numbers here if you ever want to pick up the phone and talk about how Market Invoice can help you run the business. And we were very pleased to announce this weekend, as pointed out, that we've channeled £50 million to about 250 businesses and are growing very, very rapidly. At the moment, we're currently doing about £4 to £5 million a month. Great. I'll pass back over to Helen. Thanks a lot.
Wow, Anya, that's fantastic. Thank you so much. I even learned some things there today, which is always wonderful. Okay, and now we come to our final speaker, who is Jenny Tooth. Jenny is, since July 2012, Jenny's taken the role of part-time CEO of the UK Business Angels Association, which has superseded the British Business Angels Association, and don't have a drink before you say that quickly, the trade body for angel and early stage investing. Jenny has been providing strategic support to BBAA since its establishment in 2004, supporting both policy and interfacing with government, as well as developing the trade body's major annual events. Jenny has over 20 years of experience, and I've known Jenny for many, many years as an expert in her field. She supports SMEs' access to investment both in the UK and internationally. She ran her own consultancy, including spending 9 years based in Brussels, working closely with the EC. She's operated a wide range of investment readiness programs, including projects supported by national and EU funding, and participated in a number of expert groups on access to finance, as well as chairing the EC Knowledge Intensive Services Group under DG Enterprise. In 2006, she took on the role of Business Development Director at GLE Growth Capital, and in 2009, she co-founded Angel Capital Group, where she's been acting as the MD of Angel Capital Innovations, focusing on demand-side issues and angel investment, operating projects on ICT, nanotechnology, and mobile services and applications. She's been a frequent judge at business plan competitions and acted as an assessor for the Technology Strategy Board for innovation grant applications. Jenny's an experienced speaker both in the UK and across Europe. She has an MSc in economics from London School of Economics and Political Science, and I will hand over to her now. Just check that Jenny's on the line. Jenny, can I just check to see that you are not on mute, if you've unmuted your microphone in the control panel?
I've been muted. Yeah, I'm fine now. I'm back.
Okay, thank you.
Hi. Thank you very much indeed, and apologies for that false start. Okay, so very pleased to be here, and I thought I'd go straight in after that lengthy, thank you, very kind introduction, Helen, to just show you where angel finance fits into that whole funding system that many of you will be aware of. So you can see, for many of you, I know you've been doing a bit of research into various sources, and you've heard today from our very important colleagues who are running important platforms for you to look at opportunities to gain access to non-bank and lending finance, and particularly Anil's Market Invoice. So we start to fit in really alongside some of that kind of finance, and generally when you have proved your concept, but really where you are starting to want to build that business, and angels will come in at that point. And as you can see, we fit in often generally before you might go on to more formal venture capital or achieve that fantastic trade sale or fantastic exit on AIM. So just for many of you who perhaps are less familiar with angel finance and maybe more familiar with debt and lending kind of sources, angels use their own money. They take their own decisions. It's really their own finance. So some of the kinds of people who might be lending to businesses with some of their money will use the opportunity instead to use equity to actually take shares in a company. So it's very much that idea that you will give up shares in return for a piece of investment from angels. But the most important thing is that many angels will bring a great deal of business experience and expertise, often in specific sectors, alongside their money, and that's often why they do it, because they're very interested in helping to build a business as well as invest in a business. They do bring really quite a range of finance, and it does really spread now from quite small amounts. Perhaps you're only looking for that first 10,000. They can now, through syndication and working alongside other angels, build up to about 1.5 million, and we've even done deals of 2 million more recently, where a big group of angels has got together. So you can see this really does carry you through some quite important early stages of your business growth. Angels also do invest alongside VCs and banks and obviously crowdfunders and lenders. It all often fits together as part of a big package. And that's something very much to bear in mind when you're seeking finance to build your exporting business. That often it's a package of finance, perhaps not than just one single source. Angels also will do follow-on rounds, so as you grow, the beauty of syndication, they can bring more angels alongside. And also, I think it's very important to bear in mind that compared with venture capital, when you often think that they're really looking to bring you to exit and get you to really grow very, very fast, angels will grow with you as long as they can align their interests with you and see that you can grow and they can help you grow. They'll often stay in that business for quite a long time, but they actually want to work towards an exit and hope that that will be the opportunity for them to move forward. Just a little overview of the market, because again I'm talking about a size of market which actually is quite significant, and you had some very big numbers that both Anil and Laura were actually mentioning too in their areas. Angel finance is really the most significant source of early stage risk capital, much bigger than venture capital, and in this country we are investing between about 850 million and $1 billion a year in small businesses, and there are many angels out there, though many of them may often be hard to find. There's probably about 18,000, though again very difficult to know the whole story, but you can see that is about 3 times the amount of venture capital money that's going into small businesses. So this is a very important starting point for you. I think it's really important to also bear in mind that angels, although, and I'll say a little bit more about the tax breaks in a moment, they often do focus on UK-based businesses, they're also very, very interested in helping businesses to grow. Many of them, because they've had their own backgrounds themselves in international finance, totally do want to support a company that's looking for global expansion, and will often align their interests very closely with you in helping you to strategize for that. Angels, many of them will bring their own links, their own contacts in international markets, and that's obviously worth knowing about. And they also will often make links with other investors in other countries, and they have good contacts so that they can actually build on that and build cross-border syndication. So there are really quite important examples now of angels doing investments in a company, looking for other investors in other countries, and then working with them to help to build that finance, but also that soft landing and that help that you might get from working with another investor. I thought it would just be worth going over with you just for a couple of slides here, really what angels look for, which can in some ways be different to when you're approaching a bank or perhaps approaching lending. Clearly for angels, often the very, very important thing for them is the management team, and I'm sure that's very true with my other colleagues too, but actually the way you approach your business to show that you really are passionate and that you're committed to growth is often one of the most significant things that angels look for when wanting to decide if they will put their money inside your business. They do genuinely want to see that a company is prepared to grow and looking to achieve high growth, and really you do need to show that you have got those financial projections over a 5-year period that can really show your ambition to growth and show how that will make money. Clearly, clear revenue generation model is important, and really show that you know how you can make money and how you will build that business. For angels, a scalable business model is extremely important. They actually do seek a 10 times return. It's a great ambition of ours. Quite often we only maybe only have a much smaller proportion of that. And actually, just so you know, 58% of angel investments can fail. So that is really quite important for us to think we will get a strong growth in many of the investments that we make. It's also worth bearing in mind that whilst we do not necessarily expect you to have all of your customers in place, and especially when you're thinking of moving internationally, we do like to feel there has been a clear customer base, and at least that you have some market validation and identified really what can be your share of that market in a realistic context. Really, we do not necessarily need you to be revenue generating, but we do expect you to be able to show that you can build that business, and if you have got some fast profits, clearly that obviously gives us a lot of confidence, but we do often invest before you're fully profit generating. I think having that strong USP and that differentiation in the market is going to be as important to you for an angel as it is also in achieving your external market position as well. So we are very keen to look for that. And that sense of you really understanding your competition and being able to build that in a defensible way around you so that you know how you will stand out. This could be through your showing that you've got some strong patents, but we're just as interested in strong first mover advantage. And we know that for many of you with technology businesses, actually patents aren't so easy, but having good designs, good branding and good following is also a very strong reinforcer to us. Clearly for us, we do want you to be looking to exit. As I said, this doesn't have to be immediate, but we'd like that to be in your plan, and we would want to align our interests in general with a business that has a good route to exit. And I think finally, when I talked about angels bringing skills and bringing those market contacts to you, you have obviously got to be interested in having individuals involved with you, even if it's just one lead angel with plenty of passive ones behind. I thought for some of you who may not be so familiar, if you are going to approach angel investing, it's really important that you know about the enterprise investment scheme. And I'm sure that UKTI will have a lot of details on this on their site. But actually, you have a fantastic gift to offer an investor, because you can offer a 30% tax relief to an investor who is prepared to invest up to $1 million a year in a small business. So that is very important for you to actually understand that you can offer that if you are a qualifying business. And there are some individual trades that actually are not so successful for attracting EIS investment. And there's a very important area called the new seed enterprise investment scheme, which is really important for you now to know that you can get a 50% tax relief for investing, and therefore that's a real offer to an investor to know that if they invest in your business, they will be able to get a substantial money back through their tax, and this is something that you really should know about. Clearly there are issues around this. You have to only have 25 or fewer employees, only assets of up to 200,000, and actually you can't have been trading actively for more than 2 years. But you can take on 150,000 of this, and you really should get HMRC clearance to ensure you're eligible if you're going to approach angels. A further useful thing for you to know if you're building a syndicate of angels is that also the government is operating through Capital for Enterprise Limited a very important 100 million fund, which a syndicate of angels, if they've managed to build that with a lead angel, can attract between 100,000 and 1 million alongside that syndicated deal to give you real firepower in your business. They come in as like a big angel, so it's not a venture capital fund, but it's very much up to the syndicate to actually attract that money. It's not you as a business, but very important for you to know about and to tell a good syndicate that's coming around you about it. That can be very attractive. And then finally, I just thought I'd just remind you of how we can help you, because if you think that angel finance is for you, it's very important that you actually know how to find business angel investors. And we do have a searchable online directory of all our investor members, which is networks and groups and individual investors, where you can plug in the amount of money you're looking for and where you are in the country and see which ones are accessible to you. It's also very useful to know that there is a calendar of pitching events, so you can actually work out if there are events near you can pitch at. And also we have quite a lot of information directly helpful to you, downloadable tools and some due diligence fact sheets, legal and tax frameworks as well. So I would recommend that you do go to our site, and I've given you the address there. So I'd just like to thank you very much. You can contact us on that address. And if you want to know more about angel investing, do keep in touch. Thank you very much.
Thank you, Jenny. That's terrific. We will be having one more poll, but before we move on to the poll, this is actually, if Jenny is still on microphone, on speaker, a question for Jenny. Jenny, can you hear me?
Yes, I can.
Terrific. Just some of the questions that have been coming in. Would you use an angel investment instead of a bank or alongside a bank?
They are very different, as I said, and it is really worth bearing in mind the type of business you are, because I think it is about you deciding that you do want to move quite quickly in growing your business, and you do want to exit, and you are prepared to have angels on board bringing you that kind of finance. And that is very different to approaching a bank, where you've got to think about paying it back and therefore being profitable and being able to do that. So you could be at an earlier stage, but be prepared to make those sacrifices about your shares and really be focused on growth. Then it's angel. I think if you feel you've got longer term growth, that you're going to move your profits more slowly, but that you do feel you'll be able to pay back and service a loan, then obviously you aren't giving away equity, you are keeping that business. But on another hand, very, very common often to raise some angel money and then bring some bank finance alongside, particularly for those more capital-focused investment areas of finance that you might need.
Terrific. And actually, sort of along the same lines, there was a question on crowdfunding and angels. And again, could that be a supplement, or is there a conflict?
Again, just to answer that, very frequently now a small business will raise some of its early finance on crowdfunding, often to prove that concept, to gain some real customer validation, and that can be of real interest to angels when a company use crowdfunding in that way. But we've also got deals now being done directly with angel money and crowdfunding going in at the same time to just build that whole package of finance. So I think I would say that it's a little bit to do with whether you think you're very early stage, not yet prove your concept, maybe crowdfunding's okay then, and then angel money. If you think you're really going well, you potentially want to use both.
Okay, terrific. We have just over 10 minutes, I think, on this webinar, and we have one more poll, and then we will have time for questions. So there are a few questions that have come in that are for the whole of the panel. So shall we move on to the poll next? Okay, the quick poll. Are you likely to use any of these financing options in the future? Some you've just learned about. So once again, we need you to participate and everyone to get on and answer their questions. Terrific. We're moving very swiftly. Just over a quarter of you have now completed the poll. Okay, poll results are in. And we can see, well, peer-to-peer, obviously, 53%, you're more likely to use that or is likely to use that now. Angel investment, just under 40%. Market invoice, a quarter of you, you may have just discovered that today, which is fantastic, Neil. Crowdsourcing, and then using nothing. Okay, so no choice in this particular arena. But actually, apart from peer-to-peer, it's quite a nice split there, 50% around the peer-to-peer, and then a good variety. Wonderful. Okay. So we do need to get to some of the questions. Let's just see what's coming. Now, this is a question if everyone on the panel is on the mic now. One of the questions that have come in is, do you fund sole traders and business partnerships? So if anyone would like to.
Yep, I can jump in and answer that one on behalf of Funding Circle. So at present, we can only accept applications from limited companies and limited liability partnerships. However, we will be increasing we will be able to accept applications from sole traders and partnerships later on this year. So watch this space, not just yet, and we will be opening up other products as well, but not right now, but in time.
Terrific, very tantalizing. Neil, do you want to comment on that?
Yes, so here at Market Invoice, we can help limited companies and LLPs. We are also going to announce that we can help partnerships in a few months, and also then sole traders as well. In fact, we've had quite a lot of applications from sole traders.
Okay, and Jenny?
I think obviously because we're talking about taking shares, it is very much really you having some shares to be able to give away. So on the whole, you do need to have a company structure around you. And I think that's probably what you need to consider when you're thinking about equity.
Okay. Along similar lines, there was a question of, do you fund charities? This is from Zane.
I can jump in and answer that one. Typically, it will depend on the particular entity and what security might be available. So if they wanted to secure against a property, for example, then we could look at doing something along those lines. It will depend on the instance. We haven't typically looked at that many, but that doesn't mean that we wouldn't have a look at an application if it was strong enough, and that's Laura from Funding Circle.
Okay. And Neil, charities?
Yes, we have helped charities and we've helped not-for-profits. So the best thing is to apply, and then we can assess the application.
Okay. And Jenny?
I think from the angel perspective, there is a growing number of angels who are interested in social enterprise and social entrepreneurs. I think that is slightly different to a charity, because again it's back to this issue about being able to grow and provide some kind of dividend or some opportunity for angels, even if it's not actually going to lead towards an exit. So I would say if it's a social enterprise, then certainly that has strong potential.
Okay. Another general question that's come in, that someone's commented that recently in the press they seem to highlight the difficulties in SME accessing finance. I think we get this in cycles, don't we? Have any of you found this to be the case? That it's become more difficult for SMEs to access finance with you? Laura, do you want to kick off?
Yeah, sure. So I work quite closely with a lot of finance brokers that work with us on a sort of intermediary introducer basis. So they are sort of at the coalface speaking to a large number of SMEs, and that's certainly what we found, both sort of direct that come to us and indirect that comes sort of from other referrals. And we are finding that definitely there is still the demand there. But I think there's quite a negative sentiment in that it seems that SMEs are often not even going to their bank, say, for example, because they just don't think they'll get the finance, let alone actually seeing it through. And it's often about the speed as well. I mean, on average, you're looking at sort of 3 to 6 months to get bank finance, and that's just, not really what a lot of SMEs are after. They want financing sort of decisions quickly and getting the funds quickly. So yes, absolutely, we do see that SMEs are struggling to get finance in the sort of traditional ways, which is why there's many more avenues opening up in the non-traditional ways.
Yeah, I think I would echo that here from Market Invoice. We have a lot of companies applying to us because they can't access funding from more traditional routes, or they can't access enough funding, so they might get a little bit, but that doesn't do it for them, and they need to top up. Then we're also getting past a lot of referrals from intermediaries who are looking for cash or capital on behalf of their clients. And we also do get a lot of exporters, because exporters tend to find it hard to attract finance for their exports. So definitely agree with that statement.
Okay. And Jenny?
Yeah, I mean, obviously I totally sympathise with that sense that it can seem very hard, and I think a lot of exactly what we're trying to do with our audience today and with you all is really help you to understand the right kind of finance according to your business, so that you don't really end up knocking on doors that don't work for you and wasting your time. And I'm particularly very conscious that angel investing is still challenging to find, and you do have to be what we call investment ready, which were many of the points that I just mentioned in my talk. And so I think that it's partly a perception, partly I think it's really building your knowledge base so that you really understand what is the right finance for you at the right moment in your growth and development, and so that you can then be approaching the right people who can help you, such as we are all here today.
I would just add myself, thank you, Jenny, that on the Growth Accelerator service, under the Access to Finance stream, which is the one that I'm mostly involved with, of the 4,000 or so companies who will go through the service with us, we are helping them to get investment ready using coaches and workshops and training and working alongside everyone, for example, who's been on the call today as partners and supporters and sources, so that just people who are just at that stage where they're going to access their finance, know what's involved in becoming investment ready, know what's involved in going to present for debt, to present for equity, to shop around and to look online, to find out more about things like Market Invoice and Funding Circle. I think we're becoming much more sophisticated, much more intelligent about it, which is fantastic. And also there is so much more support from peer-to-peer networks of people in the same situation. So we have one more question. What funding is available to non-blue chip and unincorporated businesses in emerging export markets? Would anyone like to jump in for that one?
Yeah, okay. I think that's directed a little bit towards Market Invoice. You know, we typically are helping UK-based SMEs who are supplying large blue chip companies around the world, primarily in OECD countries. So the developed world. Why do we start with these kind of parameters? Is because clearly there's lots of risks associated with exports, and you know, dealing with a large counterparty where there's a lot of information about the business that you're supplying is definitely going to help you get the funding you need on Market Invoice. As I hinted, you know, as our market becomes deeper and as our funding providers become larger and we're kind of more established as a platform in terms of reach across the world, and then we can start to open up the number of jurisdictions where we can help exporters, and that's already happening in some emerging economies, and we're getting increased applications for companies that are trading with the likes of Brazil and Russia, and the BRIC countries that are talked about so widely in the press. So it's always worth applying and seeing whether it would work for you.
Okay. I'm conscious of time, and I think the final question would be, how long would it typically take to access each of the sources that we've been talking about? So if anybody wants to kick that off, Laura, do you want to start with that?
Yeah, I can jump in there from Funding Circle. So typically a business will apply to us, apply online. It probably takes sort of 20 minutes, if that, to fill in the application form, send in some accounts. We will get an answer to you. So we credit assess the business. We have a team of credit assessment or underwriters here in the office, and you will be given a sort of a yes, you can list, or no, a rejection sort of come back at another time. But if you are approved, in about sort of 60 to 70% of the businesses that pass the initial stage do go on to be offered finance. It would typically be funded within sort of a day or two, and then we transfer the funds out after that. So on average, you're looking at sort of 7 days from application to receiving your funds in your account, if not quicker. So it can be a very quick process. I mean, it depends if you let the auction run for the full time, but as soon as it's fully funded, you can transfer the funds out at that point. And we've had loans for sort of £150,000, £200,000 filling up within maybe a couple of hours on the site. So it can be very quick indeed.
Yeah, this has been my experience with some of my clients with you. Okay, I imagine, Jenny, it takes longer.
Yes, but I think it does, and you know, and I do think that's all part of the considerations. But I mean, for small amounts of money, and provided you say you have got, for example, the SEIS clearance, and you can move that pretty fast now. You have to bear in mind it is a legal process because you're giving up shares in your business, and also there's often certainly a level of due diligence, and you know, the investors wanting to know a bit more about your business. But for smaller amounts, that can be as short as, you know, as 3 weeks, providing you've got all the right details in place. But a more average time is really, I have to say, you know, 3 months to get that check really inside your business, I think is a more realistic timescale, just because the whole process of being introduced to investors and needing that due diligence.
Okay, terrific. We did have a few other questions. I think anything that didn't get answered today, and I know on the website there will be conferences and shows around the country that you can look on. I would say register on Open to Export, and you can ask other questions from the panel members as well. They'll be answered. Thank you very, very much for participating this afternoon.
Thank you.
Thank you.
Thank you.
Thanks, everybody. Bye-bye.
The organizer has ended the session.